Hello and welcome to FX Bully Academy. We'll be looking at a weekly forecast for synthetic indices found in World Trade. We'll be looking at FX Vol 80. In front of me, I have a monthly chart. We can see in this monthly chart that the market moved aggressively going high. And what we'll then see it is that we created ourselves a monthly key level in a form of an order block. Also have a fair value gap here if you're to notice, but I've chosen to use what you call this order blocks, as FX Vol loves going to order blocks a lot. So in this pair, I would use more order blocks than fair value gaps. So this is our key level. What you will then notice it is that we have trendline liquidity, we have a dealing range low, we have a dealing range high, we have liquidity, and we have a key level. And what then happens is that the market, when it came down on the monthly chart, it then tapped into our key level, creating a CRT candle, right? We have this monthly candle, which will then draw our CRT high as our drawn liquidity. That's where we are targeting. We are bullish. And we have a CRT low, and the market came out and closed with this green candle. It closed within the CRT candle, therefore creating this a candle range candle, right? What we will then do, we'll then look at how we'll trade this market from this CRT low to that CRT high. Therefore, when we move to our weekly chart, we then transpose our CRT high and our CRT low, right? Then what you will see is that we have a market structure shift over here. The market took out the low, it took out the high, and we then had a market structure shift to the bullish side, right? And the market went up as usual, creating a trend line liquidity. What then happens, you have a high, you have a low, high was taken, the market came back into a key level, we then pushed more higher, we took out that high, we came back to this key level, but the key level, what happened to the key level? It was taken out. That's a market structure shift. The market went back into key level over here, and then we dropped lower, coming back, retracing into this weekly and monthly key level. When we tapped into our key level at the weekly key level, what then happened is that the market came out, giving us a change in the state of delivery. Therefore, from this point, we have a weekly order block, which was created out of the weekly and monthly key level. Then the market retraced back into the weekly key level, which is a order block over here. And then the market pushed up and it took out that high, right? Therefore, we have another structure break. At this moment, what do we have? We have this weekly order block again. That was created actually within this order block. So it is a high probability order block that has been created. So after a swing high is taken, we are expecting a pullback, right? If you were to take a look over here, what happened when this swing high was taken out? We were looking for a pullback. What then happened is that a CRT was created over here, CRT high. You have a CRT low that was created. Therefore, from this area, the market took out that CRT low into our key levels. Therefore, we then broke this area. Therefore, this became an order block. When the market came back into this order block, which is a key level, it created a CRT high. We have our CRT low over here. The market then closed within our CRT, and then we just played outside right there. and then eventually the market dropped into this key level. Right now, what are we looking at? We want the very same signatures. We took out the swing high and closed above it. Now we have a CRT high over here, right? We then have a CRT low over here. The market came, took out the CRT high, and then it closed inside. Therefore, we're expecting a bearish move to take out this CRT low. Then below the CRT low, we have a fair value gap, and we have what you call an order block. And if we were to take a fib from low to high, what you'll then understand is that this CRT low, it is within, it is below 50%. It is in the discount area. Therefore, the market can decide to just sweep this CRT low and give us another CRT within this area. Therefore, the fair value gap will be our key level and the order block below. So either here or here, we'll be looking for a CRT again to then take us above that swing high so that we may be buyers. So at the moment, what is the bias for this week, for the week that we are in? What you will then notice, it is that we are bearish for this week. Why? The market has taken out last week's swing high, and then it is closing inside, probably that's what we are hoping for, that it will close inside here, and our target, our first target will be where? Will be those lows, right, for this week. So if we were to look into our daily chart, we'll see more information right here. Let me just take out these so that our charts can be clean, so that we can be able to analyze this. So around this area, we have an order block that was tapped into. So if you were to go to our daily chart, what you will then see, that we have a key level in this area. We have a swing high that was taken out, swing low that was taken out. We have a dealing range low, dealing range high. The market came back into our key level, which is our daily key level, which is our order block. Within this order block, we then had our daily CRT. We have that high. We have this candle over here. The market took out the low of this candle and we played in that area. Eventually, we went out up to where? To our CRT high and beyond, right? So with that in mind, we then go to our 4-hour chart. 4-hour chart will be nice to look at. Now, this is a top-down analysis of the market and how we would have traded this if we were looking at the market at that time. So if you to look from this side, what you see it is that we are in the downtrend, but the market then tapped into your higher time frame key levels, right? And the market pulled back from that area. And then in a 4-hour chart, we have a CRT high, CRT low. The CRT low was taken out and the CRT high at the same time, right? So the market went high and it came back into this order block, took out the high, came back, we then swept liquidity below these lows, and then the market started moving higher, right? And then it came back in, tapped into that order block twice, and then we came out. So how would we have looked into this? You would have looked into your 1-hour chart. Let's just zoom this out and then look at the market structure within. Let's just look at the market structure within what you call this an hourly chart. So we have a swing low here, swing high there, market sweep liquidity below that, then we move higher aggressively, we take out that swing high, right? Now that's a market structure shift. We have liquidity resting below these lows. We have what you call this a key level, within an hourly chart. And the market comes back, we take out that low, and then a CRT forms within a key level. We have that CRT high, CRT low. This candle closed in this 1 hour CRT, right? And then the third candle, we're looking for entries, targeting those highs. Now, from that, the market breaks these highs. We have a swing low, a swing high. That's our new dealing range. We have an order block below there. Now our market comes. We then sweep this. We then sweep the order blocks low. What do we have? The lows are a key level also, right? Therefore, we have a CRT forming within these key levels. We have a CRT low, CRT high. This candle closes inside the CRT candle. Therefore, we are bullish now because we're in a key level, right? The market pushes higher, taking out the swing high. Therefore, we then have order blocks within this area. The market come back in that area. We buy. We take out that high. What do we have? A shift in market structure, which is bullish. Then the market comes back into this order block. We then look for more entries, targeting our daily CRT high, right? And then the market pulls back. What do we have over here, right? You have your fair value gap and your monthly CRT low, right? The market taps into that, finds supports, and then it breaks the structure above. What do we have? We then have an order block in this region, right? And the market comes back into it, which is a key level also. We're looking for more buys. And the market pushes out, makes a pullback. There's a small fair value gap right there. The market pushes high and comes back to our key level, right? And then we have a CRT also forming in that area, and the market pushes out, right? What then happens, it is that the market came back in this area. Then it tapped into our key level, and then it pushed out. You can see right there, I was looking for an entry on a lower time frame. I think I have shared a scalping, what do you call this? I've shared a scalping video in this channel, teaching you how to trade, what do you call this? The 15 minutes order blocks. So what you will see is that the market came out aggressively going higher. When it came back, there was an order block in this area, which the market came there for, and we were looking for entries from that area for the market to go high. Let me check if I can see or find that quickly. Let me check for that. Right, there it is, there. So the market came out. You have a swing high, you have a swing low. The market takes that out. Then this area we're looking for entries, and the market pushes higher. At the moment we're on the higher time frame, 1 hour. Let's go to our higher time frame, which is 4 hours, right? So in the 4 hour chart, we have this whole leg as a order block, right? We have a change in the state of delivery. The market comes back, we tap in here. What are we looking for in this area? This is a key level. You have your CRT high, your CRT low. The market takes out the CRT low, taps into a key level, closes inside there. We have one more push, doesn't take out the CRT low, and then we push out. Then we have another key level over here in the form of an order block. The market comes, taps into that, we move out. So it happens it goes on and on and on. Market taps, push out, comes back, we push higher. We have more of that over here. The market comes back, we tap into a key level, and then we push out. We go above those highs on the 4 hour chart. And then what do you see from this area? What you'll then notice, it is that the market then took out this low. That's a market structure shift on the 4 hour chart, right? So we take our fib from high to low, looking at what? A dealing range, a new dealing range that has just been formed at the moment. So what then happened was the market took out this high over here and came back and took out this low, meaning we were bullish. Now we have turned bearish on the 4-hour chart. And then what do you see? We then see the market retracing above 50% level. So above 50% level, what do you have? We have liquidity sitting here and we have our key levels. What is our key level? We have that order block over there that we can work with, right? The market comes into that. We have liquidity and we can then sell. So we have the order block, or we can use the fair value gap that is inside in that area. So we have a key level, we have liquidity above the key level, right? The market takes up, the market consolidates above the key level and it goes above that key level. You notice the bodies of these candles, they do not close within, they just close within the fair value gap, right? So the market then drops, creating an order block in this area. We then see the market dropping right now. So what is my thought process at the moment, and what is my bias at the moment, right? At the moment, as we are looking at this, I am looking at a market structure shift over here. I'm looking at this as a downtrend up until the 4-hour changes direction. So what are the targets at the moment? We're in premium. We're going into discount. I'm looking for the market to come and take out these lows, right? Then retrace back into some premium area, maybe a fair value gap, an order block. Then I'll be selling into our discount area from the, what do you call this? From the weekly dealing range. Because if you were to take a look at the moment, what we have a dealing range in the weekly chart, right? So let me get the fib from this low to that high. What we have, it's a dealing range, right? We took out that high, therefore 50% level in this area, right? Below that 50%, we have a fair value gap, we have an order block. But look what is happening over here. Above the swing highs, we have a CRT that is formed. So let me delete that. So we have a CRT at the moment. The market took out the high, CRT high. I have a CRT low that happens to be in discount, right? So we have just tapped somewhere around here. We tapped on the 4-hour chart, we tapped into a fair value gap and we took out last week's high. And now we have taken the liquidity that we need. And now the market is pushing to the low. What is our target? At the moment, our target, it is to the CRT low, which happens to be our CRT low, which happens to be in our premium area, which happens to have a key level below it, which is a fair value gap and an order block. From this area, we can then expect that the market will start pushing higher in taking out these highs, giving us another CRT so that we might know when the market is going to retrace and into more key levels up until we reach that monthly CRT high. Therefore, at the moment, for short term, we are in a bearish move up until we hit, what do you call this, a discount area, and then we'll then resume our bullish trend. The trend is bullish, but on the lower time frame For intraday trading, we'll be scalping, trading to the lows, right? So what we'll be doing here, if I go to 15 minutes chart, what you would see on the 15 minutes chart, it is that we were bullish, going high. We're not taking these lows. So a high was taken, a low was taken. So a high was taken. That's a market structure break, right? A break in market structure, a pause whatsoever. And then the market took out this market structure shift. The market is shifted from being bullish to bearish, right? Therefore, what do you expect after that? You expect a retracement. So we retraced over here, but this is a small one, into this area, and we pushed lower, right? So what we have, what we are looking at the moment, it is that we want the market to continue lower, but there should be a retracement of some sort before we continue to the lows. Let me check if we can see where the market can retrace. At the moment, I have this area as a point where the market might offer us a retracement into these levels over here after the market structure shift, and that would be nice to do so. Or if they are so generous, these guys, they can take out these lows because there's liquidity below these lows, and then they can offer us that retracement before they can continue lower, right? So what you can see in this chart at the moment, you can see that what we have here, it's an AMD pattern. You have consolidation over here, and then the market then manipulates above the highs, right? Let me change the color here. Market accumulates, then we get that as a manipulation above the highs, taking out liquidity. And right now, what we are expecting, what we are seeing now, it's an expansion move coming in, pushing to the downside, right? So it's an AMD pattern, if you will. You have the market accumulating, manipulating. Now we have that expansion going lower. So the best trade might come from these areas, or below swing lows where there's what? Where there's liquidity. At the moment, there are those who will be taking trades long, looking at this area as, what do you call this? As a place where the market should turn. But what we are looking at, we need liquidity to be building up below these lows, and the market can push higher. So from here, what we are looking at, we are looking for the market to go down up until it takes out this weekly CRT low. So for this week, I'm expecting this weekly candle to drop below at least my targets for this week. These weekly lows, that will be my target for this week as I trade. And if the market surpasses this low, I'll be looking at CRT low right there, right? So that's what I'm looking for this week. I hope you find this insightful. Until I post another weekly outlook.